रिकॉर्डिंग हो गया ना? चलो, इसमें नहीं आ रहा है, इसमें फोटो नहीं आ रहा है। गुड मॉर्निंग फ्रेंड। बिफोर वी स्टार्ट द मीटिंग, request everyone to please rise for the institute motto and national anthem. तब शुभ नामे जागे, तब शुभ आशीष मांगे, गाये तब जय गाथा, जन गण मंगल दायक जय भारत भाग्य विधाता। जय हे, जय हे, जय हे, जय 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 हे। भारत माता की। प्लीज सिट डाउन। वेलकम अगेन फ्रेंड्स। आज का दिन कुछ खास है, क्योंकि आज हम न केवल ज्ञान की बात करेंगे, बल्कि दोस्ती का जश्न भी मनाएंगे। A very warm welcome to you, all of you, of this special occasion of Friendship Day, where professional bonds grow stronger and personal friendship deeper further. दोस्तों, सीए स्टडी सर्किट एक ऐसा मंच रहा है जहां हम एक दूसरे से सीखते हैं, सहयोग करते हैं और आगे बढ़ते हैं, और यही तो हमारी सच्ची दोस्ती की पहचान है। Today topic is extremely relevant and futuristic, which is setting up an entity in international gift city, process and tax advantage. As a professional, understanding the potential of gift city, India's emerging global financial hub, is not just informative, it's empowering. From regulatory process to tax incentive, Gift City presents a world of opportunity for business and professional skills. and to guide us through this promising subject. We are privileged to have with us CA Vijay Morar ji, a highly respected name in this field of international taxation and entity structuring. Friends, दो लाइनें खाली आप लोगों के लिए मैं कहना चाहूंगा कि सीए की राहें होती है मुश्किल जरूर, मगर दोस्तों का साथ बना देता है हर सफर को भरपूर। स्टडी सर्किल है वो ठिकाना प्यारा, जहां दोस्ती है हमारा सबसे कीमती सहारा। विद दिस वर्ड आई रिक्वेस्ट आवर कोऑर्डिनेटर सीए अंकुश जी गुप्ता to please give a brief introduction of our eminent speaker Vijay ji Morar ka.
वेरी गुड मॉर्निंग टू एवरीवन। एंड जैसा हमारे कन्वेनर सर ने बोला, हैप्पी फ्रेंडशिप डे टू एवरीवन। ये दोस्ती बनी रहे, ये साथ बना रहे और दिन ब दिन बढ़ता जाए। So I have a privilege of introducing a well-known speaker in international taxation, CA Vijay Morar. He is a director, designated director at Deloitte. He specializes in advising clients in the financial service sector with primary focus on asset management industry. He has also helped various funds in setting up presence in international financial service center, including setting up of the first ever operational AIF setup in the IFSC. He is a regular speaker in various events platforms in WRC, ICI, various regions, and has also been awarded the prestigious 40 under 40 by Equalify, erstwhile AIWMI. Friends, with this short and sweet introduction, I request everyone to please welcome him with a huge round of applause. And of course, before handing him the mic, we'll be presenting him with a memento, and I request Jayesh Bhai and Mahesh ji to please join us for that.
Hi everyone. Hello everyone, and thank you to Katarka sir, Gupta sir, and Bansal sir for allowing me an opportunity to speak in front of everyone. Sir has already given a brief about my background, so I'll not go into that. I'll directly jump into our topic in hand, which is the International Financial Services Center. also called as Gift City. So there is a difference between what is Gift City and what is IFSC or International Financial Services Center. And I have a slide on that to explain what is the difference. This is basically the contents of what we're going to cover today. Sorry. Yeah. So this is basically the contents of what we're going to cover today. So Gift City per se has so many regulations, so many activities which you can do from Gift City. I have selected a couple of them, which is quite relevant to us. And of course, there are so many other things you can do. You can set up banks, you can set up insurance companies, you can set up so many different types of entities in Gift City to do so many different types of activities. I have given a list of what are the permissible activities from Gift City, and maybe we are going to go in detail for a few of them. But I think what we should start with about is to understand what is Gift City. Right. So this is basically a brief overview of what is Gift City. So Gift City, as is generally known, is a special economic zone. So this special economic zone obviously is there since a really long time. This is a special economic zone is a designated area within India which is to promote overseas business, basically to promote exports. They give a lot of incentives, a lot of benefits to special economic zone areas. As some of you may remember, there was a 10 exemption which was given to entities set up in SEZ. Now this SEZ obviously, when this SEZ was envisaged and when it was set up, it was set up keeping in mind manufacturing entities or industry entities, because at that time service industry was not very popular. It had not picked up a lot. So initially it was only SEZ, and the laws and regulations which were drafted in the SEZ were all keeping in mind the manufacturing or the industry sector. Now government, so our current PM Shri Narendra Modi ji thought that so he first had thought about the idea of IFSC. Now the reason he thought about IFSC is he started noticing that a lot of brilliant minds from India were shifting to other countries, say Singapore, Hong Kong, Mauritius, or US, UK, and from there they are doing India business. So basically they were setting up companies in these countries and then investing that money back into India. And when you would ask that why they're shifting there, they were saying that because there are favorable laws in those countries which are not there in India. So if I set up an entity in India, I have to pay so much tax. But if I set up that same entity in Singapore, I will pay much lesser taxes. So our Honorable Prime Minister realized that this is not just causing brain drain to overseas countries, but it is also impacting our Indian economy, because if you set up one entity, everybody, all of us make money, right? The CAs make money, from the stationery shop wala to the CA to everyone, to the entire industry, banking sector, everyone makes money if an entity is set up in India. But if that same entity is set up in Singapore, then nobody makes money, right? So he had thought initially of an idea to set up a center in India which will be similar to these countries, Singapore, Hong Kong, or whatever, and that center will give all the benefits which are available to these people if they shift to those countries, right? So this is where the whole Gift City idea came into picture. And Gift full form is Gujarat International FinTech City. But what there was a very interesting story around it. Gift, the full form was decided after he our prime minister said that he wanted to gift something to people in India. So that is where he coined the term gift, and then they decided what will be the full form of that gift word, right? So as you can see, there is a larger gift platform. Gift platform consists of two main areas. One is DTA. If you set up an entity in DTA, you get all the state government benefits. There are various state government benefits which Gujarat state government gives to entities set up in Gujarat. If you set up in DTA, then you get only those benefits. There are 33 buildings and it is a 15.5 million square feet area in Gujarat. This is all in Gujarat. Okay. This is called DTA. Then there is a separate area called SEZ. So this is a larger SEZ which provides you with all the SEZ benefits. Now this SEZ is also divided into two parts. One is the IFSC, from where you can take various financial services activities, and one is the other than IFSC, where you can do all the EOU activities, export oriented activities. So if you set up in this area, then you will get all the SEZ benefits, but not the IFSC benefits. So there are separate benefits available to IFSC entities under the SEZ law, which is all your GST exemptions and all of that. And there are separate benefits available under the income tax law as well, which you will get only if you are setting up in IFSC. Right. Now, I think this is a brief overview of what is IFSC. I think we already spoke about why this IFSC idea came into picture. Now, if you see the definition of the vision of our Prime Minister for setting up IFSC, it was to create a hub in Gujarat with all the modern amenities so that it can compete with the other global financial hubs like Singapore and Hong Kong and all of that. It enables you to do cross-border transactions, which means if an Indian wants to do some transactions with persons outside India, or if an outside India person wants to do a transaction with Indian, that cross-border transaction is allowed without any RBI limits or without any RBI restriction. So I'm sure you guys must be aware, or all of you will be aware that if you want to do any cross-border transactions, there are RBI restrictions, there are RBI regulations. Some of it is restricted, some of it is regulated. But any transaction which an IFSC entity does with any overseas entity, there are no RBI regulations which are applicable. So this is something which is called as full capital account convertibility, which means your capital is fluid. Like your current account transactions are fully allowed in the domestic area. In IFSC, your capital account transactions are also fully allowed. So taking money, giving money, taking money, there is no restrictions at all. Right. So if you see the objective, it was to create the global financial and IT hub, right? And to be at par or above par with the globally benchmark districts, right? Now, as I said, there are multiple activities which can be undertaken from IFSC. Basically, all the activities related to financial services can be undertaken from IFSC, right? So, for example, banking, you can do corporate banking. There are almost 36 banks which are already set up in the IFSC. Almost all the Indian banks have branches in IFSC, right? So you can set up banks, you can set up asset management, which includes your funds, your fund accounting, investment services. You want to provide advisory to your offshore client, you can set up a presence in IFSC. If you want to manage portfolio of your clients, you can set up a presence in IFSC, right? So obviously, whichever entity sets up an IFSC becomes our client, right? So that is why it is important to understand what are the regulatory and tax conditions applicable to these entities, right? You can set up insurance company. You can set up there are already capital markets entities which are set up. There are 2 stock exchanges. There are clearing corporations. There are various entities which are already set up in IFSC. You can set up back office support services, which are currently set up in say Bangalore or in some cases Mumbai. You can set those entities also in the IFSC. There are a lot of tax benefits, regulatory benefits, state government incentives, which you will get if you set up those entities in the IFSC. You can set up a finance company. Finance company basically means NBFC. To do cross-border lending borrowing, if you want to set up a finance company, you can do that. If you want to set up ancillary services unit, right? This is basically where we come. We are all ancillary service providers. We are all chartered accountants. So our services will fall under ancillary services, or it has now become a little specific. It is called BATF, which is bookkeeping, accounting, taxation, and financial crime compliance. So our services will fall under that regulation. But this is all ancillary services where your company secretary, your all other service providers will come under this, your lawyers and everything, and us. And then there are some other sectors which is possible, which is called ship leasing, fintech sectors. Basically, this all this tech companies, Wipro and all, they can also set up a presence in the IFSC. And there are some universities. This is a very good thing. There are some universities which are being set up in the IFSC. Now, the reason for setting up universities again is because the government wants that there are the talent pool which are required by these entities are grown in the IFSC itself, right? So there is Harvard ka branch, for example, in IFSC. So those people can study there, get trained there, and then they can be absorbed there itself. So that is why they have set up a lot of foreign universities, subsidiaries or branches in the IFSC as well, right? So all of these activities is something which is possible to do in IFSC. If any of your client is into any of these sectors, right, you may want to initiate a discussion with them to understand if there is a point or there is a reason for them to set up a presence in IFSC because of all the tax and regulatory benefits which you get by setting up in IFSC. Now, this is basically why set up in IFSC. Right, this is a very important slide again. See, it's India's first operating IFSC. Now, this IFSC concept, while it may seem new to us, it's a very age-old existing concept. There are similar IFSCs in Dubai, Singapore. So, if you have any foreign clients whom you may think it is difficult to make them understand what is IFSC, you can just tell them that it is similar to Dubai DIFC. Right? There are tax benefits. There is ease of doing business because there are cross-border relaxations. It is promoted by the government of India and government of Gujarat. It has good exchange control regulations, easy exchange control regulations. It has state-of-the-art infrastructure. So if you see the infra in Gujarat, in this particular area, it is very developed. It has all modern amenities. It has everything inside. It has school, colleges. It has basic hospitals. Everything you need to survive, it is there in this designated area itself. There are state government incentives also, right? Now, this is basically a slide on tax and regulatory initiative incentives which are available to IFSC entities. The first is obviously the most important exemption, which is 80LA. So under the Income Tax Act, Section 80LA, any entity, I mean, most of the entities which are set up in IFSC and who are doing business operations, who are doing any kind of business activity, whether it is insurance, bank, whether it is us as CAs, we set up a presence in IFSC. Anything we do, we get a complete tax holiday for 10 years out of the first 15 years of operations. So it is 10 consecutive years. So for example, if you think that we're setting up right now, but it'll take 2 years to break even, 2-3 years, and then maybe we'll start making profits. So you can ignore those 3 years and you can get this 10-year tax exemption from the 4th year to the 13th year. So almost you can say the first 12, 13 years, 14 years, you will pay absolutely zero tax. Right? This is irrespective of whether an Indian entity sets up in IFSC, a foreign entity sets up in IFSC, everything. It really doesn't matter. Every entity which is doing any kind of business activity is completely exempt for 10 years. Now, if you set up a LLP, you may be subject to AMT. Right. So you have to be very careful whether you want to set up an LLP or you want to set up a company. But because if you set up a company, there is this section 115BAA where you can get an exemption from MAT if you follow that specific tax regime. So then sometimes it is better to set up a company as compared to an LLP so that you don't have to pay income tax or MAT, because MAT exemption is not there. MAT is taxable at a lower rate of 9% if it's the second box, but it is still applicable, MAT and AMT. So you may want to set up a company. It is also possible to set up branches. So if you have an Indian entity which is regulated by RBI or by SEBI, you can also do this activity by setting up a branch in the IFSC. And then branch profits and your profits will get consolidated. So then there may be some tax benefits of that also. Dividend income, in case of a foreign shareholder, is subject to tax at a lower rate of 10%. which is otherwise 20%. If there is a loan given to the IFSC entity, that is the interest paid on that is not taxable in India. If the security is listed on the IFSC exchange, it is exempt from tax. On any capital gains on that is exempt from tax. Thin capitalization rules where there are certain interest expenses which are disallowed is not applicable to IFSC entities. There is no GST, of course, which is a normal SEZ benefit. Any services provided to an SEZ unit, there is no GST on that. And any services provided by an SEZ unit also, there is no GST on that. So there is complete GST exemption. And then, of course, there are some state government incentives as well. Which is detailed here. There are incentives on stamp duty, registration fees paid, electricity, employee cost पे there are some incentives, lease rental पे there are some incentives, and whatever capital expenses you incur to basically set up your entity, your machinery and all of that, that you get some capex benefits also. We'll not go into detail of each and every of these things. I'm sure this PPT will be circulated to you. But this is something which you should be aware, especially for those entities which are capital intensive, like a BPO kind of thing, where you need a lot of laptops, computers, and all of that. There, this capex reduction will be really, really helpful. And even this one-time employment generation benefit, which is there, that will be really, really helpful. Yeah. Now, these are how many entities have currently been set up in the IFSC. I mean, as you can see, there are already 36 banks, as I told you. There are 89 brokers which have been set up in IFSC. There are 200 to 300 funds which have been set up in IFSC. And as we are talking to a lot of other people in the market, more and more entities are being set up in the IFSC. Right? There are almost, if you see there are almost 17 bookkeeping and accounting firms which have already been set up in the IFSC. This may be CAs, it may be lawyers, it may be anyone, but these are the existing entities which have already been set up to do various kinds of activities. As I said, there is a separate registration for bookkeeping, accounting, taxation. So one entity can be registered under multiple brackets also. I think we have a slide on this BATF services, so we'll maybe discuss it in greater detail. Now, if you want to understand which are the current players who are set up, so these are some of the entities which are already set up in the IFSC. So almost all major banks, Citibank, JP Morgan, Barclays, BNP, Indian Oil, finance companies like Indian Oil, asset managers like Morgan Stanley, Mirai, almost all large brokers, Edelweiss, Motilal Oswal, Anand Rathi. So all of these entities have already set up a presence in IFSC, which shows that how much these IFSC has picked up. And as we speak, so many more entities are also being set up in the IFSC, including Morgan Stanley, which is setting up a presence in the IFSC. So lot more and more new entities are being set up, and even these entities includes global groups like Mirai and Morgan Stanley. It includes local Indian entities like ICICI, Lombard, and all of that as well. So basically, Alchemy, if you see, it's Indian. A lot of Indian banks have also been set up in the IFSC. Almost all Indian banks, ICICI including, have set up presence in the IFSC. Right? This is basically what are the regulatory considerations which are applicable to set up entity in the IFSC. So basically, if you are an Indian entity which wants to set up a presence in the IFSC, what are the regulatory conditions which are applicable to you? Is mentioned here. So the biggest benefit of setting up a presence in IFSC as compared to any other country like Singapore is the first point, where you see that that if you want to set up in Singapore, for example, then only OPI is possible, overseas portfolio investment. That OPI can be under that OPI can be made only by individuals or by listed entities. So individuals, if they want to make, so basically suppose like just to take an example, if you want to invest in a UK fund or in a fund, in a Goldman fund, which is set up in say UK, you can invest only up to LRS limit, which is $250,000, right? And a listed entity can invest. But these are the only two people who can invest. In IFSC, even unlisted entities can make that investment. So if there is a company which one of your clients have, which has a net worth of say 500 crores, they want to make investments outside India. From their individual capacity, they can make very limited number of investments. And obviously, they don't have a listed entity. But their Indian entity, which has 500 crores of net worth, they can make investment in the IFSC entity. That is the biggest benefit that unlisted entities have been permitted to invest in IFS. Right? I think rest of the points we've already discussed broadly, or they're maybe not so important. Now, before we go on, if there is any question, we can take it up. Otherwise, we'll move on. Factory, no. No. This is only for financial services. So only services are permissible. This services also include treasury, which we are going to discuss again. That is more like taking money, giving money, like NBFC activity. But only financial services are permissible.
If an entity is set up there, they have branches outside IFSC sector. So what happens to the services rendered in those branches? These are outside.
So this IFSC is basically for overseas activities, right? So from IFSC, you can provide services only to outside India. In India, it is generally not permitted. Even if it is permitted, it is permitted only to a limited extent. IFSC entity cannot set up a branch in India. That is not allowed. They cannot have a branch in India.
That's right. Banks or their asset management companies are there. They are having branches.
No. So city has set up a branch.
They are having branches.
They have branches in India.
The services which are rendered from there are sacred.
Yes, that is correct.
So
suppose Citibank has a. So let's take example of Deutsche Bank, for example. It's in Europe, right? It has set up multiple branches in India. It has also set up a branch in IFS, right? Now let's take an Indian bank, say PNB, Punjab National Bank. Punjab National Bank has entire operations in India. It has set up one more branch in IFSC as well. So you can set up a branch in IFSC, that is allowed. But you cannot incorporate a company in IFSC and set up branches in other places. That is not allowed.
Only those activities which are rendered has to be identified for the bank.
Yes.
Activities which are service rendered from IFSC, right?
Yes, that is correct.
Not outside.
Not outside, no.
That will be treated as a foreign branch. Foreign branch and all.
It will be treated as a foreign
branch.
Yes. It will be treated like a foreign branch. That is correct.
Whether it was EPO services, typically rendered legal and accounting and all that outsourcing.
Right.
That can be set up there.
Yes, it can be set up to a limited extent. If you see this, if you see second last point, ancillary services can be set up to provide legal, accounting, audit, compliance, recruitment, and all of these services. So if you want to, ancillary services, correct. Ancillary services you can set up to very specific services which you can do. And one more key point is most of these services, except those CA services which we all are doing, most of the services can be done only for a FS group, which is a financial services group. So you can provide these services to banks or insurance companies, but you cannot provide these services to a Google. Corporates. A Google. Correct. So non-FS corporates you can provide like Google, Facebook. If they want to set up a presence, that they can't do. Only banks, insurance companies, only financial services entities can set up this presence. for ancillary
Oh,
services.
sorry. Thinking of being.
Yes.
I see. What exactly nature of service they can provide?
So there are two things they can do. First, if they want to, there are, see, as I told you, there are so many entities which have been set up in IFSC, right? If they want to provide services to any of those entities, they can do from IFSC. Or if they have any foreign clients in Singapore, Mauritius, any other world, any other country in the world, they can provide services to all those clients. And for CA services specifically, there is no sector restriction, which means you can provide services to anyone across the globe.
Anyone?
Yes. No, so if suppose, for example, if entity in IFSC is providing services to Singapore company, Singapore will make payment to India, right? There is a possibility that Singapore may levy some tax, but it usually gets covered under the tax treaty and tax treaty exemption, or there may be some withholding which Singapore entity will do. Like if there is a foreign company which provides services to India, when India makes payment, they deduct some taxes at source. Now that taxes is obviously a dead cost that you can't do anything about, but at least there is no tax in India, so you save that much. But a lot of these overseas countries, they give exemption under the tax treaty. That if this is the nature of services, there is no tax. If this is the nature of services, there is no tax. So specific services, there are exemptions, which if you avail, then there is absolutely zero tax every year.
There would be some tax compliances in those countries.
Now, for example, not necessary. So, for example, as Deloitte, we provide services to uh, firms across the world, right? US, UK, almost everywhere, Australia, New Zealand. They make payment to us for the services we render, but we don't have to do any compliances in those countries. They may be deducting some taxes while making payment to us, but other than that, there is nothing we have to do. We don't have to file returns or anything. Even if a foreign company is providing services to India and Indians are making payment, those foreign companies have exemption under the law from filing tax returns. Similar exemptions are there for Indians who are providing services to overseas countries.
In these of funds, the local partners putting money yesterday.
Right.
And then you have a trust management companies which are being set up there, right? And so how is the round tripping being taken care of in such cases?
Their round tripping is okay. So there are 2 points here. One, under the RBI regulations, round tripping is permitted. Now, there was an amendment about a year and a half back, which said that round tripping is permitted. So if you are as a person in India wants to put money in IFSC, and then IFSC puts that money back into India, RBI has no challenges in that, right? So technically this is allowed, but we have been interacting with a lot of IFSC authorities. We have interacted with them in the past, and they said that they don't want to promote this kind of structure. They don't want to make IFSC sound like like a jurisdiction for round tripping of money, which is why practically, although it is permitted under the regulatory regime, IFSC is not comfortable with that, and hence you may not get an approval to set up an entity like that, which only purpose of round tripping. Having said that, if for example you have 100 million being put from India and 1 million being put from India, 100 million are coming from overseas, and then 101 million is invested into India, to that extent of 1 million round tripping IFSC should be okay, because it is a very minuscule amount as compared to the entire scheme of things. So that is okay. But a round tripping is permitted. That is a fact. Yes.
So what will happen every time he wants to repatriate the rights back to his country? Like what will the tax come?
So it depends. So there are various entities which are setting up in IFSC. It depends upon what kind of registration you take, what kind of activity the Indian entity is doing. If, for example, you are investing in a fund, there is a specific exemption under the law which says foreign investors investing in a fund in India, no tax. If you are investing in, say, an insurance company, there are taxes on exit. So it depends upon what kind of structure you have invested in and what time are you exiting and what are the tax implications. So depending upon various structures, tax implication may differ on exit. But if an NRI is investing logically, it unless he's setting up his own presence, see, it's not like he will invest in an insurance company just like that, right? Unless he wants to invest in listed companies, of course, that he can do. But again, if you are investing in any security which is listed on the IFSC exchange, that is exempt from tax for all non-residents. So that exemption will be available. But if he's doing a strategic investment in an insurance company, at 50% stake is acquiring, when you sell that, that will be taxable. We can move ahead. So I'm going to go in a little bit detail about BATF because that is, of course, which is most relevant to us. Now, I think it's a very brief slide, okay, which I've put only what is relevant. Now, what are the tax incentives? I mean, of course, we know there is a 10-year tax holiday, like we discussed earlier. Out of the first 15 years, if I did not mention that earlier, this 10 years have to be consecutive. It is not, you cannot pick and choose these 10 years. So if you started in year 4, you have to continue after that. You know. There are state government incentives and all of that I think we spoke. Now, what are the activities you can do from IFSC if you set up a BAT in IFSC? So first of all, one important thing is BATF earlier was allowed by way of branch. Now it is not allowed. So if any of us wants to set up an entity in IFSC, it has to be a separate company or a separate LLP, right? Most of the structures allow branch, but this structure doesn't allow branch, right? Now, what activities can you do? You can do bookkeeping. So basically, if you want to do accounting for any of your accounting, bookkeeping for any of our clients, overseas clients or IFSC clients, we can do sitting there in the IFSC. If you want to do any taxation services, any tax compliance, tax advisory, whatever you want to do, we can do from the IFSC. And if you want to advise on the financial crime compliances of these entities, that also we can do from the IFSC, right? If you want, if we want to set up an entity in IFSC, we don't have to hire all new employees there. We can relocate some of the people from here to IFSC up to 20% of the strength in IFSC. So if IFSC has 20 people, you can relocate 4 people from India to IFSC. Okay? But that 4 people should be supervisors. So basically, it's fairly senior people. You can send from India to IFSC and you can set up an office in IFSC. Who is the service recipient? To whom you can provide services. Basically, any non-resident and IFSC entities, you can provide services to any of them. They need not be in FS sector, they can be in any sector, right? So you can provide services to Google if you set up in IFSC. Any specific restriction? None. There is no restriction, but only these permissible activities can be undertaken, no other activity. This is a very specific BATF regulation for us. As I said, there is ancillary services where you can do much larger activities, investment banking and all of that, but that is a separate regulation with separate restrictions. And this is possible. Now, this is basically details of all the activities which you can do, right? Maybe a little more elaborative. Like if you want to review the financial statements of your clients, if you want to do compilation of financial statements, if you want to maintain their accounting, if you want to prepare their tax returns, prepare their financial statements, provide valuation to their balance sheets, right? Preparing of ledger accounts, their AML compliances, anti-money laundering compliances, whether they're compliant with that or not. And any kind of tax consulting, basically, which you want to do, that is permissible. All these points are coming from the regulation itself, right? So this is specifically which the regulator has said under BATF, this all services would be permissible.
Auditing is also permissible.
Auditing is also permissible. So almost all big fours, Deloitte, PwC, EY, KPMG, some of the medium-sized firms, BDO, law firms, IC Legal, and all of that, everybody has set up their entities in IFSC.
But it is not a branch.
Branch was allowed earlier, now it is not allowed. So they are all,
Separate auditing firm, you will just say.
sorry,
We should have separate.
separate entity, yes, separate auditing firm. Yes. Yes, absolutely.
How much cost required to set up the?
Okay. See, it is not as, it is costly, I would say. It is not as cheap as setting up an office here. But it is cheaper than setting up an office in overseas countries, right?
Approximately.
So, if you want to hire, there will be salary cost, of course. So that I'm keeping separate, salary cost for people you hire. But to set up, including the registration fees to IFSC and all of that, should not take more than $15,000, $20,000, which means 10-12 lakh rupees.
Premises are available, cheap or not?
Premises are available 1 lakh रुपया per month. Lease rental 1 लाख रुपए होगा, 6-7 लोग बैठ सकते हैं.
Long lease is available, 5 years.
मुश्किल है right now. So they are making more and more buildings. They are under construction, so so new buildings are coming up. You can expect more office spaces to be available. Right now there is a little shortage of office space, but co-working space मिलता है, like WeWork and all है ना, वो सब मिल जाएगा easily. Co-working spaces are available.
What services law firms provide to the units in IFC?
So basically, if you remember, they could set up funds. So funds ka document, legal drafting documents ka, PPM drafting and all of that they do. If they have to provide services to a Singapore entity, unka documentation draft karna and all of that they can do, everything they can do from the IFSC. So basically they're helping entities set up in the IFSC and to some extent even in overseas countries. They're providing legal services.
Law firms abroad.
Sorry?
Do they need to tie up with the foreign law firms?
Not necessarily, no. If they have sufficient name in the market that they can directly get clients, they don't have to tie up. It's not mandatory.
A broking firm can do their property business at that IFC center.
If they want to trade on IFSC exchange, they can do it. They cannot trade on Indian exchange. But if you are a stock,
They cannot trade.
sorry,
Broking firm, set up there in IFC center, they cannot trade in NSE or PSU. So
they can
their own
not.
property-
That will be round tripping. That will be round tripping now. If Indian stock broking firm sets up a presence in IFSC and then trades it back into India, that is round tripping, which as I mentioned, it is not allowed. Round tripping is allowed technically, but IFSC will not allow you to do that. That is not the intention. They will be like, if you want to trade in NSE, BSE, directly do trade. Why do you want to route it through the IFSC?
Yeah, see,
Any organization, how they get the clients from the overseas? Because that will be a separate entity, not connected with the local one in India.
Right.
But we will get the payments in dollars or foreign currency. How they will approach the clients or how they will clients from overseas by advertisement or by any other source provided by the government to get the clients.
To get the business, unfortunately, there is nothing like that.
As now we are saying we are separated.
Hmm.
Not connected with the local market.
Your people there can have reporting lines. Basically, you can hire people there and they can be all reporting to you. That is allowed. So you can hire your own bachas. That is allowed. That is okay. It can
They can do the advertisement or something.
no. See, ICI norms will not allow you to do advertisement. Forget IFSC. ICI norms will only not allow you to do it.
ICI, but non-CA, other persons can do or not?
That too they can do. Like lawyers
Many
too.
people are doing accounting work.
Yes.
Accounting work with the overseas clients.
Yes, they can advertise. They can advertise. They can do marketing. Anything is allowed. That is not a problem. Dubai may now there are taxations, right? But so there may be not local taxes, there may be some indirect taxes or state taxes which is there, which also is exempt in DIFC. And there are see, even though there may be not taxes, but there are very stringent regulatory conditions which are applicable, which is also not applicable in DIFC. That is why. So
The NRI individuals also in IFSC, trading in Indian stock exchange. Did you say that?
no, they can do. They can do because it is not round tripping. NRI is
They
non-resident.
get a fund from.
Yes.
They Indian entities, they don't pay any tax.
They don't pay any tax on
Profit they make.
on non-equity. I think we have a separate slide on this fund structures.
Has been, stock exchange in security.
So we have a separate slide on this funds and fund management. If we go on this, we will realize that there are some structures where they will not pay tax, and there are some securities on which they will not pay tax, but there are some securities on which they will pay tax. So there is partial exemption
Depending upon the natural.
depending upon the nature of it.
So you mentioned about the construction part, there are builders in that city, or is it government is?
No, there are builders.
Builders. They also are registered in that area.
No. They are like the founding fathers. They have built it from their own hands, so they are not required to be registered. There are some entities which are not required to be registered who are providing services. Like for example, there is an entity called JLL, which is providing all those support services. So basically, you have your watchman, gardener, and they provide all those support services to those entities. They provide office boys and all. They are not registered, although they have a lot of income from IFSC. So one important point which I forgot to mention is you can provide services to IFSC entities without setting a presence in GIFT City also. That is possible. So if you want to provide services to IFSC entities, you don't have to be in IFSC, right? You can be in IFSC if you want to have that 10-year tax holiday, but you don't have to be in IFSC. So today sitting here, we are providing services to all IFSC entities, which is absolutely possible. But we are not getting the tax benefit. That is the only difference.
How does it go with salaries? Because you want that.
Employees have to pay tax. Employees, it is not to pay. We have to pay tax.
But complying is to apply specifically to those companies expecting to be working in active employment. Like
Yeah.
if I want to go abroad, then similar.
Yes.
Yes, Chief City has some, who's defined that what are the activities can be carried, if somebody wants to study in detail. Any rules, regulation, available in GIFT City.
So if you remember the slide where I showed where multiple activities are permissible, every activity has a separate regulation or 2-3 regulations. So if you want to study banking, there are banking regulations, there are banking rules, directions, and all of that. You have to study all of that, and then you can be an expert in banking. Where see every sector, every activity के लिए, there are different regulatory frameworks, there are different guidance notes, which is provided by IFSC. And once you read all of that, then you can basically become knowledgeable about every of those sectors. Like this BATF is a separate regulatory framework. So there is a 20-page document which gives all the conditions, regulations, restrictions related to BATF. Now, once you read that, then you can know everything about this. And there is obviously a website where all these regulations are available, and I'm happy to share that after this.
Available in outright basis?
Outright sale, very difficult. Very difficult. I mean, there is a long lease option available, but outright sale, very difficult. No, not 99. 5-7 years, 10 years. 5-7-10 years max.
10 years, 15 years.
10. Wait, what's the See, the point is, this office space was available about 4 or 5 years back at 7,000 rupees per chair, as they say. Like, they sell it per chair. So per chair it was 7,000. Today it is 17,000, 15 to 17,000. So in 4 years, the prices almost become 2x, 2.5x.
Buying, selling is allowed.
Huh?
Buying and selling is allowed.
Buying and selling,
For application.
you have to build and sell. There is no buy and sell. Nobody will sell you that because they know it's a piece of gold. Matlab, you whether you set up or not, that property is a piece of gold. It is going to the property value is going to go up really, really high. That is what is expected. It will. No, never will. No, there is no restriction. You cannot get employed. You can get employed there, but then you will have to have a special card, employee card, which you can then you can start working there. But you need to make that card for yourself, which is not expensive, which is zero fees. It is just to enter into the FA. But as a tourist, you can visit anytime. That is all.
Sir, it is 15 years tax person to say. How person can carry a lease and how does that?
Well, you can renew the lease.
That's what I'm asking, it's a renewable, right?
Renewable. Everything is renewable.
Any option, any increase the lease rent also. for-
Exactly. That is why they will give you only 5 years, 7 years, because they want to increase the rent. See, because if they give you a 5-10% increase, after 5 years, the property value may have tripled for all we know. So they don't want to get bounded by 5-7% increase. That is why they will give you 5-year lease only.
Tax holiday, we are seeing yesterday and even tax are taken from your government is.
There is no direct tax for 10 out of 15 years. GST also is not there because it's a SEZ and there is no GST on SEZ. So no GST.
What happens if entity makes losses?
Then you don't take tax holiday for the first. If it is in the first 2-3 years, then don't take the benefit. Don't take this 10-year benefit. But suppose you made profit in the 4th year, 5th year, you took the benefit and 6th year you made losses. Kuch nahi ho sakta. That's called. You can't claim.
Select the block.
Sorry.
Once you select the block.
Once you select the block, that is done.
That continues.
That continues for 10 years. That continues for 10 years. Yes. GCCs, there are GCCs which are being set up. Very few have been set up right now. Bank of America has set up a 4,000 people set up in the IFS in GIFT City. So there are people who are thinking about setting up. Its GCC regulations are very new. They're like 2-3 years old. And Indian entities, as I said, cannot set up GCC. It's only by the foreign entities who can set up. So then it will take time for them to trust GIFT City. It's a very new regulation, that's why. See, one more problem, which I don't want to highlight too much, but one more problem with GIFT City is these are all. You have a lot of talent in India because there are a lot of colleges, schools, study circle like this, and all of that. Such things are not there in Gujarat. So if you want to hire a 4,000 people team, GCC, to get 4,000 people is going to be challenging. Right? Like if you want to set up a tech center, if you set up in Bangalore, you will have so many people who are ready to take a job. Not so simple to set up in Gujarat. So that is also one of the challenges why there are not a lot of GCCs in.
The infrastructure is not ready.
Infrastructure is there, people are not.
There are education centers and hospitals and all those things are always in and around this. FC center. Not that, but.
It is there. I think Dhirubhai
It is not free.
it is working. It is working.
No, residential premises.
That is under construction. So a lot of things are under construction. We are expecting that this. You can say last 6 years of my life, I have focused only on GIFT City. Okay, and I have a lot of faith that this will grow substantially, right? So I feel that this is picking up. Construction is happening. A lot of things are happening there, and in the next 2-3 years at least, we should see the number of entities set up there almost double, which means the work for us is a lot, right? As of now, no, it's all under construction. You know, things take time to make, especially here. So infrastructure takes its own time, and some of it is also, see, the property prices are rising very rapidly, so they don't want to lease out right now. So they're not constructing very quickly, because the more scarcity, the more property prices go up and all of this. Then all of these political things are there, but the long and short of it is still pending. It is coming up. It is not come up as of.
You are regularly there.
Frequently, yeah. Yeah, so I'm going to go actually there on Tuesday, and then in 22nd August also I'm going to be there.
ऑफिस सेटअप किया क्या उधर अपना?
As a Deloitte का ऑफिस सेटअप हो रहा है, हम लोग का 100 people का ऑफिस होगा उधर.
It is a different firm altogether or the same firm?
Different entity,
Different entity itself.
different incorporated entity.
Same name.
Same.
Foreign branch. You mean foreign branch.
Sorry,
You mean foreign intent.
foreign entity. Yes.
But how can you?
Sorry,
But how can you have a same name as such?
same matlab similar. Deloitte, Chartered Accountant LLP, Deloitte, something like that. So like, see, Deloitte has branches, Deloitte has companies in 180 countries. So everybody uses the same brand name Deloitte. So that's allowed. And the name will
Different partners altogether.
different partners. Yeah. Different partners, same brand name, Deloitte. So in India also, Deloitte has entities in 13 different states. So that is all allowed.
And get the benefit of brand. Then
Yes. 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 To get clients. Right.
Any other big four is setting up in gift city?
All of the big fours, all big fours are already there. PwC office is there since last 3-4 years. Deloitte is the last one.
What about the small firms? Big four are okay.
There is I mean, there are medium-sized firms, CNK hai. There is BDO, medium to large-size firms hai. Small firms, for small firms अभी तक तो नहीं है.
Small नहीं है अभी. और merge करना पड़ेगा देवी नगर वालों को.
हाँ, actually.
1500 मेंबर मिलके Deloitte से बड़ा बना सकते.
In सीतारामन जी ने तो बोला ही था ना, they want to set up a Indian Big Four. उन्होंने स्पीच में बोला था they want to set up a Big Four equivalent in India. So we all can start that actually, setting up Indian Big Four.
देवी नगर can make a Indian Big Four.
Actually, वही मैं सोच रहा था. He can do that.
He called members. We already discussed in our committee meetings that.
Okay, I have a few more things to cover. So this is basically setting up of funds and FMEs in IFSC. This is basically to invest in stock markets or Indian companies. So this I think will be also relevant to a lot of us, because we will have a lot of NRIs who will keep asking me, how can I invest, where can I invest, and all of that, right? So I think there are a lot of regulatory conditions which are applicable for the funds and the fund manager setup in IFSC. I don't think I need to go into a lot of details in this. When the sites are circulated, I would request you all to read this. I would more want to focus on the taxation aspects, because that is really critical. Right. So like, if you see this slide, this says that how many people have to be present in IFSC if you want to set up a fund in IFSC. Right. Now, where all investments can be made? What are the investment conditions? You need to have a minimum corpus of $3 million and all of that. So these are all conditions, all numbers. I would request you guys to go through that separately. This is what we are talking about here. This is the main slide. So if you see, there are investors outside India which are investing in a fund which is set up in the IFSC. There are three categories of funds: category 1, category 2, category 3. Category 1 and 2 are mainly for investing in private entities. So if you want to set up a manufacturing plant, right? So you invest money in an AIF, then AIF invests in that manufacturing entity. So if you want to set up a hospital, if you want to set up any kind of entity in India, then you invest through an AIF, category 2 AIF. If you want to invest in public markets, in stock markets, NSE, BSE, then you set up a category 3 AIF, which also have a separate slide on. Right now, if you see this structure, it's very straightforward, simple. There is a manager entity who will manage the AIF. The investors are putting money in the AIF, and the AIF are investing in unlisted securities. AIF can only invest in securities. It cannot invest in projects. Okay, so it can only invest in shares, debt, whatever. So we have to ensure that AIFs are not investing directly in any physical assets, right? Now, from a taxation perspective, if you want to do this activity, except for the fact that you need people and whatever amount, minimum amount there, these are the tax implications. So if you see, AIF category 1 and 2 is pass-through. When I say pass-through, it means the AIF doesn't pay any tax in India. Only the investors pay tax in India, right? So investors, so if AIF has invested in this unlisted security and has earned a dividend income or interest income or capital gains on transfer, that income is taxable actually not in the hands of AIF, but in the hands of investors. Now that tax rate is 12.5% for long term, if assuming share investment in shares, 12.5% for long term, 20%, 30%, 35% for short term. So 20% is if it invests in listed. So while it has to primarily invest in unlisted, it can also make some listed investments if it is required. 30% if it is unlisted shares, and 35% if the investor is a foreign company. Foreign company ka rate is higher, 35% 30%. Dividend income is taxable at 20%. Interest income is taxable at 30-35%. Right? Now, you would think that these tax rates are very high. But if the investors are eligible for tax treaty, then that treaty benefit they can take. So for example, if you invest in units of AIF, category 2 AIF, and then that AIF invests in NCDs or debt securities in India, right? Your investor is suppose from Singapore. Okay, an investor in Singapore, it invests in AIF, AIF invests in NCD, non-convertible debentures of the Indian company. Now that interest is taxable at a lower rate of 10% under the India-Singapore tax treaty. Plus, any capital gains on NCD is exempt from tax under the India-Singapore tax treaty. So while it appears that these tax rates are there, but they can take tax treaty benefits, and these tax rates can be reduced to quite an extent. Right? For the fund manager entity, which is doing business operations, see, now this AIF is not doing business. It is only making investments. So this is not eligible for a 10-year tax holiday. But the fund manager entity, which is managing this AIF, they are doing business, so they can take the 10-year tax holiday. And plus no GST on services, right? Now, the benefit of this is, if the foreign investor was investing directly in India, in suppose Indian company, now that foreign investor, first of all, if it wants to invest, it needs to take a PAN. It needs to take registration in India. PAN dena padega. You have to file tax returns in India. Audit ho jayega. Kuch bhi ho sakta hai. Matlab, you know, when you invest, when you take a PAN in India, you can always be subject to Indian regulators' eyes. But if they invest through this AIF, they don't have to take a PAN. They don't have to file a tax return, which means they are not in the eyes of law. They are not in the eyes of the Indian tax authorities. Right. So because they're not in the eyes of Indian tax authorities, they are saved. So this is where if somebody says, okay, I want to invest in Indian company, but why should I invest through the AIF? Why can't I directly invest in India? This is your reason. This is the main reason why you would want to do that. Right? This is for unlisted investments. Now, if we move to listed investments, this is where the main benefits arise. Now, if you see, the structure is exactly similar. Investors investing in AIF category 3 this time, and they are investing primarily in listed. Now, in this case, your tax is actually paid by the AIF, which is the fund in India. Your investors are completely exempt from tax. So if you're an NRI investor or your foreign investor is investing in a Cat 3 AIF, if you see your region, they don't have to pay any tax. Chahe they sell these units, if they get any income from these units, like we get mutual funds or dividend, if they get any income, that is also exempt. If they buy, sell, that is also exempt. Plus, they don't have to obtain any PAN. They don't have to file any tax return in India. So all exemptions which is possible is available to these foreign investors, right? Plus this IFSC AIF, which is there, in case it makes investment in listed equity shares, that is taxable, but except for listed equity shares, any investment it makes in any securities, whether it is debt, derivatives, bonds, security receipts, anything it does in India, in IFSC or outside India, everything is exempt from tax. So if it invests in US security, no tax in India. If it invests in NSE, BSE, derivatives, futures, options, no tax in India. So everything is exempt except for shares. And dividend and interest income is taxable at a lower rate of 10%. So this is where the real benefit is, where except for shares, everything is basically exempt from tax, and even dividend is taxable at a lower rate of 10%. Right? And once your AIF pays taxes, investors don't have to worry about anything. So this is where the main benefit is. Again, your 10-year tax holiday for your fund manager entity, no GST. See, now this no GST, if the fund manager were to charge GST to IF, to this AIF ka NAV would have got less because AIF has to pay extra money to the fund manager. So it would have got less. Their NAV would have got lesser. But because of the GST exemption, investors are getting benefited. If you realize, yeah. So this entire scheme is definitely so much more beneficial especially if your investor wants to do derivative trading. It can invest in this AIF and then get complete exemption from derivatives from this. Or if they want to do bond trading, or if they want to invest in GSECs, everything they can get all the exemptions if you invest through this structure, right? I think taxation of fund manager entity, I think we've discussed this already. What are the benefits you get if you invest? The tax exemption of 10 years, concessional rate of 9% for MAT. That MAT is also not subject if you opt for 115 VAA, lower tax regime. No GST on procurement of goods, custom duty is not applicable. This is all basically standard SEZ exemptions. Now, this I wanted to just make sure that we understand what is actually required if you want to set up in IFSC. See, this while I have covered only for funds, this broad structure is applicable for all entities you want to set up in IFSC. Right? So first step and the most important step is to identify an office space in IFSC. Now, for that, you may have to travel to IFSC, look at which are the good office spaces, which are available office spaces. That is also difficult to find. Then you set up the entity in IFSC. If you want to set up BATF, for us, you set up BATF. If you want to set up a bank, you set up that entity. If you want to set up a branch, you set up that entity. So basically, whatever entities you want to set up, you set up that entity. Then you take a PAN for that entity. Right? If it is a branch, no separate PAN is required. Separate entity, then you have to take a PAN for that entity. Then you have to apply to the IFSC administrator to take approval to be present in that SEZ entity, right? So that is just to be present in the SEZ entity. That is the first approval. The second approval is with the IFSC authority. This is like you going to RBI or going to SEBI and saying that, okay, you please register me with you. So this SEZ is to be present in that particular jurisdiction, and this IFSC is to do that activity from that jurisdiction. Right? Now, once you do that, you can start doing any kind of activity you want from that particular jurisdiction. Right? So this is basically the broad steps. This is why this is specifically to funds and fund managers. But if you modify this a little, everything it becomes applicable to almost every entity you want to set up here. Right? Why do you want to set up in IFSC? Tax benefits, lower rate of tax on dividend. GAR. I'm sure if you have any foreign clients, they will ask, what if GAR becomes applicable? What if the government levies GAR on me? What do I do then? But if you set up in IFSC, and even though you are taking so much benefits, the fact of the matter is you have taken an approval from the regulator who has looked at all your activities, looked at how many people you are hiring, looked at everything, and then given you an approval. Now, and obviously the government is trying to promote this, right? Now, with that perspective, the government will not usually not come and say tomorrow, okay, now you, even though we only gave you exemption, now you pay tax under GAR. So I think it is fair to say that while technically GAR provisions are applicable, there are good chances that the IFSC authorities would not, or the government would not levy GAR on this particular, subject matter. Indirect tax benefits, as we spoke about. Okay. So this is basically the entire fund structure. If any of your investors wants to invest, yes, please. Question.
I think this is a GP fund structure, right?
Right.
The money will also come in. There's a structure we have to capture the LP fund.
Sorry. These your investors are effectively LP.
Where does that?
LP is the investors. Investors, LP, it's one other thing.
And the GP.
GP is the FME.
Yeah.
So GP money comes from FME, LP money comes from investors. So LP, you modify this into any other structure. If this is like, if you want to say company, then FME is like your board of directors and your investors are like shareholders. So basically investors are where the money is coming from and FME is basically where the decisions are being taken. Yes, this is the GP LP structure or any structure you call it. So any other questions? Sorry? Adani and Ambani ka? They are not there in the gift city, no. But they are making buildings in the gift city, so they are selling gift city to people. This fund management. Fund management is the most flourishing business. Although, as we speak, we have been speaking to at least 20-25 people, 20-25 different corporate groups, including Indian Oil and so many other groups, to set up something called as Treasury Center, which I will going to cover after this. So I have covered three major sectors. One is this fund, because this is the most popular structure. One is BATF, because that is obviously relevant to us. And the third one is Treasury, because in my opinion, that is the one which is going to grow exponentially in the next 2-3 years. So which is why I've covered only these three sectors. But obviously there are a lot more, because see, if I have to talk about Gift City, it requires at least 2 to 3 days of intense full day training to talk about everything which is there in Gift City. With the 2 hours I had, I think these three most relevant to us, most promising, most developed structure, and third is most highly emerging sector. These three things I've covered.
In this, the intensive as compared to normal and in terms of capital requirement.
Capital requirement broadly similar. Broadly similar. See, what they have done is So I was a part of the committee which has drafted this regulations actually. So I'm aware about how the IFSC has thought about this. So what they have done is they have picked up the Indian regulation. They have picked up regulation from Singapore, UK, and all those 5 countries, and they have merged everything to make one regulation which has the regulations of the India also, and which is the benefits of foreign country also. So it's a mix and match of all 5, 6 regulations. The benefits of each regulation is there in this.
Indian corporate can list the FCCB on, FCCB issue can be done on IFSC's market.
MCC can be.
FCCB exchange whether FCCB issues, presently FCCB issues are listed either on London Exchange or.
It can.
Singapore
Yes,
Exchange.
yes, it can be listed.
Same thing can be done.
Yes, yes, absolutely. I actually have my last sort of thing on what can be listed on the IFSC. That also have one slide on that. Because that is, sorry, just to add that that is something which you can do without setting up a presence in IFSC. So
Corporates maybe.
corporates can list that. So I have that one slide also that I have not mentioned purposely in the content slide. That was a surprise. Yes.
Any LRS limit, be applicable to Indian resident investing in IFSC?
Yes.
Yeah.
LRS limit is applicable. It has to be within LRS. But as I said, there was one benefit where if you want to invest in a fund like this fund, so this fund where the money is coming from outside India and investing in India, it can be reversed. Where the money is coming from Indian
Yeah.
and investing outside India, because that is also cross border and there is no round tripping in that. That is possible. Now, if you were to set up this kind of reverse flip structure in India, so India will not allow you to make overseas investment, RBI regulations. So you can't set up effectively. If you want to set up in Singapore, then you will be subject to LRS limit as an individual, or listed entities can do it. But if you flip the structure and set up in IFSC, then your unlisted entities can also start making investments. Your family offices, your family money, your HUFs, and all of that can do. So currently, if you have an HUF who wants to invest in the US, they have LRS, which is very less. They don't have listed company in their group, so they can't do it, basically anything. But now they have an option. Now they can set up, they can invest in a fund which is there in IFSC, and that money can be invested outside.
But that is like $50,000.
No, $250,000 for individuals. But if you have an entity, a company, a partnership, that can invest 50% of net worth. So, for example, if you have a person who has the 100 crores of net worth, and he says that I want to invest 30 crores in US, for example. So you can invest up to 50%, up to 50 crores in the IFSC. Right now, this is not allowed. If you don't have IFSC, this is not allowed. In IFSC, now this is allowed. So that is why that regulatory benefit becomes like a very, very important thing. There are a lot of funds already which are set up in IFSC which are doing this activity, just pooling money from Indians and then investing outside. It is very same. Even you sell or redeem shares like if you do in mutual funds, you just sell or redeem shares, you get the money back. Taxation is there. Taxation is there. See, that structure is not, there is no tax benefit in that structure. Entire tax is to be paid. It is just a regulatory benefit which you get, which is something which was not allowed at all. Now you at least can do that. So tax is full tax as applicable. No exemptions at all. In the interest of time, we'll just move ahead. See, this is, I feel, is the most emerging business currently, which is there in the IFSC. This is also relevant to a lot of BPOs, KPOs, and this is basically relevant to all the entities which either wants to do two things. See, this I have written who should set up in IFSC if you were to read that. uh, who should set up is the most important question, because this regulation, I think, is so broad that almost any entity in the world could benefit from this regulation, right? And which is why I think it is the most emerging ones. For example, you have a KPO in India. Now, these KPOs are compensated on a cost plus basis. So basically, if you have 5,000 people, so 5,000 people ka cost is say 50 crores, you get compensated 70 crores, cost plus 20%, cost plus 40%, whatever. So these all entities are all cost plus basis. Now, because of that, there is a lot of money which gets accumulated in India, right? And there's obviously an option to send that money out by way of dividends or whatever, but that is obviously taxable. Dividends are taxable in India, right? If you distribute dividends to foreign companies. Now, this is a structure which you can use to repatriate that money. So basically, if you're Indian entity, BPO, KPO, invest in a finance company or an NBFC equivalent in IFSC, and that NBFC gives loan or gives capital to the foreign company, that is something which is possible. This structure can be used to repatriate your excess cash which you have in India. And because this is all investment, there is no tax in that. So if you see here, cash rate Indian entities can set up this in can set up an entity in IFSC to repatriate their excess cash. If you want to do treasury center, so for example, uh, there is Google. Right? I'm just taking Google as an example because Google is not an FS, but they can also do this activity. So they have companies across the globe, across various jurisdictions. Now, if they set up a treasury center in IFSC, every entity can give their surplus cash to this entity. And then suppose there is an entity in Indonesia which has extra money, and there is an entity in France who needs money. So they can everybody who has extra money can put it in the IFSC, and everybody who needs money can come to the IFSC entity and say, okay, I want money, you give me money. So all those group loan structures can be done from this IFSC entity that is called a treasury center. So all your cash rich entities, your cost plus entities in India, all of them can set up a treasury center. There is one more very interesting structure which you can set up. It's like a holdco structure, like Tata Sons is. So basically, Tata Sons, all the Tata Group companies are held by Tata Sons, which is the main holding company. That holding company also you can set up in IFS. That also is permissible. Side, if you have an Indian group which wants to invest in overseas countries, which want to set up subsidiaries overseas, that also can be done from this IFSC. So the thing is, if you look at the list of permissible activities for this particular treasury center, there are so many activities which are permissible that your imagination can go anywhere, and you can practically tell any entity to set up any kind of structure in the IFSC depending upon the requirement. So I think this regulation being so broad will have a lot of usage for a lot of entities. Now, I will give one simple example which we have implemented this structure. There was an Indian entity which wanted to take loan from a France bank because lower interest rate, right? The French bank has a presence in India, but they don't want to take from India because India was very expensive. The rate of interest is like 12, 13, 14%. France, they were getting it 6%, 5%. So they wanted to take loan from a French bank under the ECB regulations, permissible. Okay. When that French bank gives loan to India, the interest you pay to the France, that is taxable. Because you have to do a withholding on that. We told them that assume that foreign entity is a French bank. Let the French bank set up an entity in IFSC, or even we can set up an entity in IFSC. That is okay. That entity you set up in IFSC, India say, let the French bank give loan to the IFSC entity. That IFSC entity will give loan to India. Right? Now, because the IFSC entities has 10-year tax holiday, you don't have to do any withholding for IFSC. Right? So you can remit the entire amount to IFSC without any withholding. So no taxes. Now, when that finance company will repay loan to that foreign bank, again, no taxes because of this. interest on loans paid by unit in gift city is exempt in the hands of non-resident. So because French bank is a non-resident and it has given loan to an IFSC, there is no tax on payment of interest. So basically no tax from India to IFSC, from IFSC to foreign company. Right? So there the entire tax got saved. Right? So this structure, as I said, is very broad, very emerging. And I believe, that this is where the future of IFSC, this is where the most action will happen. I mean, I have given a list of permissible activities. What all can you do? We can, I mean, I will leave it to you for reading as a reading material. But any questions on this?
No, sir, loan benefit is available, I understand, but for bank guarantees and all, this is also can be planned in that way.
Yes.
Bank guarantee also covered in the settlement of.
Yes, absolutely. Bank guarantee is possible. So as I'm saying now, if you read this regulation now, the more you read it 5-6 times, you will realize, okay, ye bhi kar sakte, ye bhi kar sakte, ye bhi kar sakte, ye bhi kar sakte. It's a very broad regulation.
Will they allow virtual office in IFS?
No.
Or Indian company?
Physical office is mandatory.
It has to be physical office.
Physical office तो चाहिए ही, but physical लोग भी होने चाहिए, वो भी important है. You can't sit in India and say, I have an office there, but I will have all people in here. That is also not allowed. Any other question? Okay, so I come to the last point of my presentation, which sir was asking on the listing. So I have 2 slides on this. Sorry. This is what can be listed in the IFS, right? This was the question. What can be listed in the IFSC? You can, if you have an unlisted company in India, doing an IPO with SEBI obviously is much more complex, time consuming, everything, right? If you want, you can directly do an IPO in IFSC. That is something which is allowed. The regulatory regime for doing IPO in IFSC is much simpler as compared to doing it with the SEBI. If you want to do a follow-on public offer, so if you have already listed company, subsequent you want to do in IFSC, that is also permissible. Rights issue, special purpose acquisition company, all of them can do their IPOs. Qualified placement by listed companies. Depository receipts you can do. So basically that is something which is possible. Debt securities you can list. This is something which is in discussion. Secondary listing of units. So this is very prevalent in the European jurisdiction, where your same security is listed in multiple places, right? So like if you have a share which is listed in domestic NSE, it can also, the same share can also be listed in the IFSC NSE. That is something which is under discussion. But this I think also will pick up. Secondary listing of securities where the securities are listed in both places simultaneously. Like it is already listed in NSE BSE, right? There are some shares which are listed in both places. Whereas there will be some shares which are listed in NSE BSE in India and NSE BSE in the IFSC as well. So more liquidity in that sense. And then so commercial paper and certificate of deposit, which is possible. Now these are some tax benefits on what on securities listed on IFSC exchange. Capital gains on all of the securities exempt from tax only to foreigners, not to Indians. Okay. Interest income on bonds taxable at only 9%. And there is no stamp duty, there is no STT, there is no commodity transaction tax, there is no GST on brokerage, nothing. So all the indirect taxes are exempt for the securities listed on IFSC exchange, which means the cost of transaction goes down considerably. If you see here, last point, foreign currency denominated in equity shares, this is also exempt from tax. So basically, if you have an Indian entity which lists shares in IFSC in foreign currency, it will be listed only in foreign currency. Okay. and a company from Singapore, suppose, purchases that shares and sells that shares. If you see in the entire slide deck, there was nowhere where equity shares were exempt. This is the first place where equity shares will also be exempt. Sale of equity shares of an Indian company will be exempt, right? That is why this is important. So if an Indian company lists its equity shares in IFSC and any foreigner purchases or sells that, no tax on equity shares also. This is the only regulation which exempts equity shares. These are some of the bonds which are currently listed on the IFSC exchange. Right? I will maybe hold on for 5 seconds on this to read it. So that's it from my side. Thank you again so much for giving me this opportunity. If you have any further questions, I'll be more than happy to take them either here or separately. I have my contact details also mentioned here. So if you want to reach out separately, please do that. Yes, sir. Sorry, sir. Liquor is permissible in IFSC. Yes, you can, but Gujarat government's permission anybody, which is very difficult. Gift city means allowed, but it is very difficult to get permission. You need to have too much cash. Huh? Permitted subject to how much money you have depends upon that. Yes, sir.
The entity is taking a tax of 10 years, 15-year bracket, and transfer the return from other entity. Maybe with the same promoter or with another promoter.
Possible. Absolutely possible. A 10-year tax holiday will not be impacted. Obviously, if you have carry forward losses, that gets lost under Section 79. But your 10-year tax holiday will continue the way it is.
You can keep on taking 10%.
No. 10 is for the entity. That's it. 10-year tax holiday over, then it's over. So whether you sell the shares, you do whatever, that entity will be eligible only for 10 years. Yes, please.
What about the deferred tax liability? Is it applicable if the tax holiday period of 10 years?
You mean MAT AMT, right?
No, deferred tax, DTA. Deferred tax liability.
Deferred tax is you have to just account for it. It's an accounting liability. You don't have to pay. Don't have to pay it out, right? It just has to be accounted. But this would be a permanent difference. This is not a temporary difference. I don't think we book deferred tax asset or liability. It's a permanent difference. So I don't think you will have to worry. No need to do it. Thank you.
Any more questions?
Thank you, sir.
Thank you.
Thank you.
Thank you, Ivarka sir, for your insightful and structured presentation. Sir, you have wonderfully demystified the process, highlighted and practical steps, and clearly outlined the tax advantage, all in manners that were easy to absorb and highly relevant of our profession. Sir, your experience and clarity of thought truly added great value of today's session, and I am sure all of our members are walking away with much more confidence and awareness about the opportunity of gift city present. सच कहे तो जहां ज्ञान हो, अनुभव की रोशनी हो और सरलता की भाषा हो, वहां सीए विजय मुरार का जैसे वक्ता मिलते हैं. We are truly grateful to your time, your knowledge, and your ever approachable style of sharing. Friends, we have started new initiative on AI. On this, I request our past convener, CA Chintan Saha, to give a brief knowledge and practical insights of artificial intelligence.